Good morning once again. Today we're going to have a brief review of what we have discussed so far as regards stock risk and return as with reference to securities, particularly stocks. What we have learned so far was to download stock prices from Yahoo Finance. What we did was to collect stock prices for eight securities, 8 stocks, including the benchmark, the market, the proxy for the market, which is Standard and Poor's. So we did that last time, and we learned how to plot Apple. In this case, we use Apple prices, and we learned how to plot the open, high, low, close of the stock using Excel's graph stock provision graphing for stock provision for stocks in Excel. Okay. Also, we learned how to compute for returns. We said that we either have the discrete return, which is simply the value at time t over time t minus 1. Okay, and also we get the log returns or continuous returns, which is we said that in finance this is more used. Okay, and then we learned how to compute for the variance, for the risk of the asset using variance. We base it on the historical returns. Okay, we compute for the variance based on the returns of the asset and not the prices of the asset. Okay, and then we can also get the standard deviation, which is just the square root of the variance. We can also use the Excel function of Excel in Excel, either var.s or stdef.s to compute for the variance and the standard deviation. Okay, and then what we did was to formalize our computation. Okay, what we did was to average the returns for Apple up to GSPC, compute for the variance of the return, and then the standard deviation. Okay, we also learned how to compute for the coefficient of variation and then the beta. Okay, the beta, which is simply the how sensitive the stock is relative to the market, and we use the slope function because the slope is a measure of the riskiness or the sensitivity of the asset relative to your market. Okay. Now we learned how to look at Yahoo Finance and measure the and look at the beta. Okay, so in this, I'm including this worksheet, okay, as a reference for you. Okay, so this morning I got the ExxonMobil stock. The ticker symbol is XOM. Okay, so the beta, according to Yahoo Finance, is 1.35, and it's a 5-year monthly data. So I wanted to see how if we get this data, the 5-year monthly, and then compute for the beta, I wanted to see if we get the same answer. Unfortunately, guys, I'm not able to get exactly 135. It's a bit close, guys. It's a bit close, but it's not really 1.35. I tried to look at materials on how Yahoo Finance computes it, and it's how we compute it. It's the way we learned how to compute beta. Only that I'm not sure why I'm getting 1.35. Why it's reflected as 1.35 when I'm getting 1.05. Okay, so quickly, guys, you know how to do this. I got the closing prices of Exxon and the GSP close, because we said that in order to compute for the beta, we get the slope of the stock relative to the market. Of course, we use the returns. So this is the returns based on the okay. So this is not GSP close. This is GSP returns. Okay. So you know how to get the returns. Yahoo, I think, is using the discrete returns. Okay. So it's just the ratio of the previous of the current divided by the previous. Okay, so after getting those returns, we can easily compute for the slope. okay, which is your beta. So this is our beta, which is the slope of the line where or we are regressing your returns of Exxon on GSPC. So maybe I should let me hide the others. Hide. Okay. So here we can see that the slope is 1.05. Okay, 1.05, and it doesn't match with the 1.35. Okay, I've computed this before, maybe 5 years before, and I was getting the correct answer. Before, the beta of Yahoo was computed based on 3 years, 3 years monthly. Now I noticed that they expanded it to 5 years, but whereas before I was able to get the beta that's very close to the reflected beta in Yahoo Finance, now I'm puzzled why I'm not getting the 1.35 here. But anyway, it's close compared to the beta that we computed before, right? The beta that we were computing before was okay. Let me convert this. If you recall, it was really way off the beta as reflected in Yahoo Finance. We were getting these values. No? In the Yahoo Finance, we looked at, for example, I think Apple, it was 1.2. Okay, si Tesla 1.9. Okay, but here we're getting this, and the reason behind is that we're using weekly data. No? Weekly data yung ginagamit natin, and this is a four-year period. While in Yahoo Finance, it's using monthly data, 5 years. But then again, I'm really puzzled why it's quite far. Ang layo eh, no? 0.26 compared to 1.2. That's quite a far measure. So up to now, guys, medyo I'm not able to decipher yet. I use as I mentioned here, I use the 5-year data, monthly data, and then I'm getting 1.05, okay, as compared to 1.35. By the way, guys, the slope can also be expressed as, okay, let me insert just for our information, sigma, insert, okay. Another formula for, oops. Okay, so let me just explain this. Oops, wala yung sigma. Okay, let me just explain this formula. Okay, sorry about this. Okay, so bakit may summation to? The slope, guys, can also be computed via this formula. The slope is actually equal to the, if you recall from your statistics, there is this concept of covariance. Okay, it's a measurement of the relationship between two variables, how they vary. So that's defined as sigma ij. It's the covariance of asset I with asset j, and then the variance of j. Okay, so to compute for the slope or the beta, you can also use this formula. which is the covariance of the asset and the market, which is GSPC, divided by the variance of the market. So here, guys, you can see that I computed for the covariance between the returns of ExxonMobil and GSPC. And then here, I computed for the variance of the market. Okay. So you just get the ratio of the two. It's just the covariance of your Exxon and GSPC divided by the variance of your market, GSPC. And you get the same, exactly the same. Now in this side, I tried to use the adjusted close. And of course, I expected this to be lower because, sorry, my mistake. And I got a beta of 1.038, which was smaller than the beta of the closing prices, no? So hindi pa rin yung adjusted close ang ginamit ni Yahoo Finance. So as it stands right now, guys, hindi ko pa rin na-decipher kung paano nila napalabas itong 1.35 na to. Okay? So it might be a good thing, guys, for you to try to discover paano kaya niya na compute tong 1.35. Because as we said, beta is a very important measure of the riskiness of the asset relative to the market. Okay? And sabi natin, ang proxy sa market is sa US, no? GSPC. If you're going to do this here in the Philippine setting, you're going to use the PISA, Philippine Stock Exchange Index. It's a basket of 30 stocks. Unfortunately, guys, sa Philippine setting, yung Philippine Stock Exchange, it's not really as generous in sharing the stock prices, no? Historical naman yun eh. Hindi ko alam kung bakit binebenta pa nila sa mga students, no? It doesn't make sense. Historical na siya. So, anyway, there are databases naman na makukuha natin yung stock prices. Lasal has subscribed to Icon. Icon is a database and you can get stock prices for stocks in the Philippines and globally, no? So, pero kung sa PSE ka mismo, sa Philippine Stock Exchange, it's sad that you will have to buy the price, no, for a fee, which is absurd really. Samantalang sa US, mo si Yahoo Finance, easily available. Okay, any questions with this, guys? Itong 3.2 na worksheet. Any questions? Chat naman kung clear so far. Ito, hindi ko na kayo, guys, kinumpute ko na ng diretso kasi nga in the interest of time. Anyway, we have discussed this before. So, ang nadagdag lang dito yung covariance at saka yung variance, which is similar to the computation of the slope. Any questions? Okay, let me rephrase my question. Is it clear, guys? Chat naman please kung clear so far.
Clear po.
Okay, thank you. Thank you. Thank you so much, guys. Pati sana yung iba, no? Kasi only 9 out of 26 ang responses so far. Feel free, guys, to ask questions if you have any. Okay, good. Thank you. Okay. Now let's go to the next, itong 4. Itong worksheet number 4 natin. Ito. So dito na talaga magsisimula ang discussion natin ng portfolio, no? Portfolio analysis. Okay, so we have the same returns here, guys. Same returns lang din yan. I hid the other rows. Okay. Okay, now you notice, guys, na iba na yung computations dito, no? Iba na yung computations. And just to, again, guys, I computed this already for in the interest of time. Now, oftentimes, what we want is not the daily returns, neither the weekly returns. Weekly yung data natin, no? Hindi natin ano yung monthly, okay? Neither the neither the daily or weekly. What we're interested in more is the annualized. Wait. That gives me an idea. Okay. And di rin kasi, this is monthly data. If we convert this into magka-cancel out lang yung ano yung 12, no? Okay, I was thinking baka you need to annualize the data. Okay, anyway, sige, balik tayo dun sa discussion natin. Okay. Now these are weekly returns ito weekly returns yung unang kinompute natin, ito weekly returns. Now how do we convert this to annualized data? Okay, so to convert this to annualized data, what we do is simply multiply the weekly data by 52. Kasi there are 52 weeks in a year. Okay, so to convert it into annualized, just multiply it by 52. Okay, there are some references here, guys, that I shared. No? You may wish to look at that. Okay, kapag daily yan, guys, you multiply it by 252. So tingnan nga natin sa dali itong Wikipedia na to na trading day. Just for the information of the class. Okay, I think I already opened that. So you may wish to open that trading day, no? Trading day. So ang trading day, guys, is the time span that a stock exchange is open on a particular year. So sa US, tingnan natin, noong 2016, there were 252 trading days in 2016. Okay? And then 2017, 251, 2018, 252. So thereabouts, guys. Ang average siya more on 252. Noong 2020, 253. Noong 2021, 252. 2022 ngayon, bilang nila, discounting yung mga holidays, guys. No? There will be 251 trading days. Tapos 2023 to 250. But the average of this will turn out to be more or less 252. No? So when you convert daily returns into annualized returns, you multiply it by 252. When you convert weekly returns into monthly returns, you multiply it by 52. Yung monthly naman, of course, times 12. Okay, so that's how you annualize your stock returns. Okay, so dito, what we did was, we got the average of the log returns and then multiplied it by 52 since we're using weekly data. So ngayon, ito na yung average annual returns. Okay? Yung variance naman, guys, same, we multiply it by 52 also. Okay? Of course, the standard deviation, it should be the square root of 52. Okay? It should be the square root of 52. Bakit? Kasi di ba, pag kinocompute natin yung standard deviation, it's the square root of the variance. So dapat, if you want to compute only the standard deviation and not the variance, you should multiply the periods, which is 52, by the square root of it, by its square root. Okay? So wala na ibang nagbago dito. Si beta, ganun din. Okay? Ito, beta lang to ng ginagamit natin yung covar at saka yung variance as I mentioned a while ago. Okay? So this is just to convert your weekly or monthly or daily returns into annualized data. Okay. Any questions, guys? Dito sa conversion from weekly in our case to annual. Usually naman yun ang kailangan natin, yung annualized data, annualized return, annualized risk. Okay, once again, guys, please chat if so far clear yung natin, yung pag-compute ng annualized na returns at saka risk. Unless you have questions, guys. Isa pa lang nag-chat. Waiting for the others, guys, to key in the response if so far clear yung pag-compute ng annualized. No? I'm sorry guys that I had to do it this way kasi nga medyo kulang na tayo sa oras and I had to do some adjustments. I would that you yourself did the computation, no? Did the keying in of the formula sa Excel. But we'll do that for the portfolio. Okay, thank you so much for your responses. Okay, now we go to portfolio risk and portfolio return. Kasi, di ba sabi natin, ano ba yung purpose ng diversifying your investment? There's, sabi nga nila in layman's term, it's not good to put all your eggs in one basket. Okay, hence, Harvey Markowitz in the 1950s developed this, what we call MPT. No? MPT is the modern portfolio theory, MPT, which is in finance. This is the modern portfolio theory. Okay? And itong theory na to, napaka-powerful na to. Kasi it tells us that in order to mitigate against risk, importante na dinadiversify yung asset. If you take a look at this plot, guys, sinan nyo to. Now, this y-axis is a measure of riskiness of the portfolio. Tapos itong x-axis natin yung number of securities. Now, if you notice, guys, as we increase the number of securities in the portfolio, the total risk is minimized. So habang nagdadagdag ka na nagdadagdag ng assets in the portfolio, guys, okay? Let me just go here. Okay. So if you take a look at this, as we include more assets in our portfolio, ang nangyayari guys, bumababa yung natin, yung risk. Until such time that, okay, kahit na dagdag ka pa ng dagdag ng risk, hindi na bababa yung portfolio risk. I mean, ang assets, hindi na bababa yung risk natin. Okay? Now, this indicates that there are two types of risk. Number one, yung diversifiable. Number two, yung systematic. Yung pwede nating ma-reduce by means of diversification, by means of adding more stocks, is called diversifiable risk, or another name for this is unsystematic risk. Okay? The other one, guys, is called systematic risk. And this risk, guys, cannot be diversified away. Okay? Hindi, kahit na 1,000 stocks yan, hindi mawawala to, no? Bakit, guys? These are risks beyond the control of the investor. For example dito are risks that pertain to the country, no? Kasi wala nang control yung yung investor. No amount of diversification can ever control yung mga factors that are affecting the nation itself or the global scenario. Kunyari, ngayon medyo nagkakaroon ng potential na Russia will invade Ukraine. So that's a global risk, no? And the investor cannot do anything with that. So that's what we call a systematic risk. So no amount of adding stocks in your portfolio can ever reduce that, no? Kasi systematic risk ka, no? So kung tutusin, guys, the only relevant risk is the systematic risk. Ito lang yung relevant risk. Okay? Why do I say relevant risk? Kasi the other risk, especially yung diversifiable risk, can be reduced by adding more stocks in your portfolio. Okay? So that's what we call diversifiable risk. Yung isa naman, systematic risk, and that is the only relevant risk. If a portfolio has a big amount of diversifiable risk, kasalanan na ng investor yan, no? Or kasalanan ng fund manager. Why did it not attempt to diversify to mitigate against the risk by adding more stocks in the portfolio? And that, again, it's important. An important concept, guys, is you can only do as much. Okay? Kahit na magdagdag pa tayo ng 1,000 stocks dyan, okay, this systematic risk will still remain. Kaya nga yan lang tinatawag natin na relevant risk. Okay, so that's the reason, guys, why we need to do diversification. That's why we're analyzing portfolio risk kasi alam natin na itong mga risk na to, guys, itong measure natin ng historical risk, pwede nating mapababaan yan, okay? If we add more assets in our portfolio. Ito, guys, ito yung mga security risks, no? Ibig sabihin, if we only have kung Apple lang stock natin, let me copy. Para alam natin kung share to. Lagyan ko lang to ng line para okay. So if we had only Apple in our investment, then the risk, the measure of the risk for this particular period, no, from January 2018 hanggang December 2021, risk as measured by standard deviation is 29.95% or 0.3. Now, if we maintain a portfolio, guys, ang mangyayari, mamimitigate yung risk, bababa yung risk. So let's have an example. Let's have a 2-asset portfolio. We started with this example last time. 2-asset portfolio. Yung computation, guys, ng portfolio returns is very easy. Kasi, di ba, paano natin i-compute yung portfolio returns? It's simply, let me write again the formula. Portfolio returns, return of the portfolio is simply the summation of the weight of each of the asset multiplied by the return of the asset. So yun lang yan, no? So you have to know the weight and then the return. Okay, so in this case, let's assume that we're having a 2-asset portfolio, Control C, Control V. Okay, so let's say that we have Apple and Microsoft, a simple example lang, no, in our portfolio. Now, as we said, guys, having 2 assets in the portfolio is better than just one. Kasi as we'll show now, mababawasan yung risk natin. Okay, so when we compute for the returns, ang mangyayari niyan, let's assume that it's equally weighted, no? So 50%, 50%, total of 100%. And we know that the return of Apple is, okay, annualized tayo. Let's copy this. Okay, I just copied it from the annualized returns. Okay, therefore, the return of the portfolio sorry, mali. My mistake, guys. No? Kinumpute na pala natin dito. No? So, the portfolio returns will be computed by multiplying the weight by the return of the asset. No? WI times R sub P. So we multiply the weight 50% times the return of the asset. Okay. This one also, and then we sum them up. So this is the portfolio return, which is the summation of the weighted returns of the asset, 35.59. Okay. As you can see, 35.59 is lower than the Apple returns, but it's higher than the Microsoft returns. So the returns will be between the two. But what will be glaring is the risk. Now, how do we compute for the risk? Yun ang question, no? Kasi yung pag-compute ng risk, hindi siya kasi simpleng ganito, guys. Portfolio risk is computed by this formula. So tingnan nyo, medyo nakakatakot yung formula, no? Double summation ng sigma ij. Sigma pertains to the variance and the covariance. No? So let me just explain that. Ito, guys, illustration lang to, no? So this is a 3-asset portfolio. We have A, B, and C, no? So the weight of A times the return of A, weight of B times return of B, plus weight of C times the return of C. That is our returns. Yung variance niya ito. Okay? So saan ang galing yan? Okay, it's from this formula. Yung kanina, no? So let me just let me explain how it's done. Okay, we will not delve into the mathematical side of this so much, no? Pero just to explain to you what's happening, I is equal to 1. Okay, J is equal to 1. Okay, ilan yung assets natin, guys? Di ba dalawa? Okay, so this is how we write this, no? Ito yung formula ng portfolio. This one. Okay, so paano nako-compute yung portfolio na yan? Yung risk ng portfolio. Lagyan natin dito. It's the risk of the portfolio squared to, no? So this is actually the variance of the portfolio. Tapos yung standard deviation niya, kukunin natin yung square root nito. Okay, so how do we okay, dali. Kulang to, guys, sorry, WIJ. Okay, I'm sorry, guys, may kulang ako sa formula. Dito dapat yung weight, no? Let me just correct this. Dapat may W dito. IG. Okay. Wij sigma 1ij. Okay, very quickly, guys, yung konting math lang nito, napapakita ko lang. So unang gagawin natin, i-prepare natin. I-prepare natin si I at saka si J. I refers to the stock, no? Since dadalawa lang naman tayo, si Apple lang to at saka si Microsoft. So how do we pair this? Well, ang pairing nito, guys, 1 with 1, 1 with itself, and then 1 with 2, and then 2 with 1, and then 2 with 2. Okay? So 1 with 1, 1 with itself, and then si 1 i-prepare natin with 2. So tapos na si 1, ano? Si 2 naman, 2 paired with 1, and then 2 paired with itself. Okay? So what will happen now is, explode na natin yon. So it will be, susundan na natin to, guys, yung IJ na to at saka IJ na to. So first is W1 with W1. Sabi nga natin kasi 1, 1, sigma 1, 1. Okay? Tapos sunod 1 with 2, sigma 1, 2. So ganun lang yung pattern, guys. Okay? And then, si 2 naman, si 2 pinapair natin with 1, 2 with 1, so that's sigma 2, 1, and then 2 with 2, W2, W2, sigma 2, 2. Yan. Okay? Then simplify na lang natin. Yan na yung pag 2 asset portfolio. That's the risk of a 2 asset portfolio. So this is equal to, this is now equal to, okay, let me just, W1, W1, sigma 1, 1, this is W1 squared, no? W1 squared times sigma 1, 1, this is the covariance of 1 with 1. Anyone, guys, what is the covariance of asset 1 with asset 1? Anyone? What is the covariance of asset 1 with itself? What do you recall from your stat? The covariance of an asset with itself is what? Is the variance. Diba? It's the variance of asset 1. Kasi you're co-varying 1 with 1. They're the same asset. Okay, so it's the variance. Okay, next. So ito, yung susunod, guys, so plus tayo, no? Plus, ano? W1, W2, covariance 1, 2. Tapos ito, W2, W1, covariance 2, 1. Okay? Now, itong covariance 1, 1, 2 is just the same as covariance 2, 1. Ano ba yung formula ng covariance? No? What is the formula of covariance? Sulat ko na nga dito no, para matandaan natin kasi baka nakalimutan nyo. Covariance of 1 with 2 is what? Is equal to, okay, the sum of x1 minus the mean of x1, ba? Times what? Times x2 minus mean of x2. Average ni x2 over n minus 1. So that's the covariance of covariance of 1 with 2. On the other hand, what's the covariance of 1 with 1? Well, the covariance of 1 is simply the sum of x sub 1 minus the average of x sub 1 times x sub 1 minus x sub 1 din, no? Kasi 1 with itself eh. So kaya nga nagiging square siya over n minus 1. Okay? So that's the formula for covariance, guys. Just to refresh us a bit about variance and covariance. So, ang mangyayari ngayon dito, guys, ito, W1, W2, covariance 1, 2, W2, W1, covariance 2, 1, they're the same. Kasi pwede mo naman pagpalit yung order ng yung products nito eh, di ba? Yung factors nito. So, we can just write this as plus W1, W2, covariance 1, 2, W2, W1, covariance 1, 2, 1. We can just add it. No? Magiging 2, W1, W2, then covariance 1, 2. And lastly, guys, so plus. Ano to? Yung huling term na lang. So that's W to the W2, that's W2 squared. Sigma 2, 2 is variance of 2. So this is the variance for a 2-asset portfolio. 2-asset, no? So ang standard deviation yan, standard deviation or the risk of the portfolio, ito yung volatility, ito yung usually tawag natin dito risk, it's just the square root. No? Square root of what your variance is. Okay. Okay, any questions, guys? I know medyo ano yung math na, pero hindi naman natin ima-manual yan eh, no? I'm going to teach you a technique. But just that's just what we really need to know about the computation for the risk of a portfolio. It's really quite involved mathematically, no? Pero buti na lang, guys, sa algebra, pwede nating i-compute yan using this matrix algebra. Itong W times the covariance times the transpose of W. This is just another way to write this. Ito in matrix form lang. Okay? Now, in order for us to compute, ilang terms ba? Ilang terms yung number of, to compute for the risk of the portfolio risk? So the formula there is n squared minus n over 2. No? So first, computin natin ilan yung terms dito ng covariance. Pag two stocks, guys, ilan yung variance? Ang variance ang dalawa. Kasi yung variance ng asset 1 at saka variance ng asset 2. Tapos ilan yung covariance? Yung covariance is simply n squared minus n Ba, ito, n squared minus n over 2. So, ilan yung covariance? Isa lang, no? Isa lang. As shown here, di ba? Ilan yung covariance ng two asset portfolio? Ito, isa lang. Covariance. Covariance with 1, 2. Ilan yung variance? Dalawa. Variance ng 1 itself and variance ni 2. Kasi dalawang asset tayo. Asset 1 will have its own variance. Asset 2 will have its own variance. Tapos ilan yung covariance niya? Isa lang din. Covariance of 1 with 2. Therefore, yung total terms, guys, total terms kapag two asset portfolio is just ito. Tatlong terms, no? Tatlong terms yung risk. Yung pag-compute ng risk. Just like this one, guys, di ba? Ilang terms to? Ito. 1, 2, 3. Okay, so imagine, guys, if it's a 3-asset portfolio. So if it's a 3-asset portfolio, pwede natin i-copy na lang pababa to. Okay. Oops. Three asset. Okay. Pag 3-asset portfolio, guys, 6 yung terms. Pag 5-asset portfolio, 15 yung terms na kailangan i-compute natin. Imagine, guys, pag 10-asset portfolio, 55 terms yan. 55 na ganito. Diba? So, medyo involved, guys, medyo talagang madugo yung computation ng portfolio risk. Buti na lang, guys, may mga shortcut na pwede natin gamitin, no? Okay? So, dito, guys, ang gagawin natin, kukumpute natin yung portfolio risk using a shortcut. Okay? Ang shortcut natin, guys, will be okay. Ang long cut natin ito, no? Ito. Dali. Sulat ko na nga. So if we're going to really manually compute for the risk, two asset portfolio, di ba? It will be square root ng W1 squared variance of 1 plus 2 W1 W2 covariance 1 2 plus W2 squared variance ng 2. Ayan. Okay? Iisa-isahin natin yan, no? Iisa-isahin natin yan. Pero guys, mahirap gawin yan kasi matrabaho yan, no? So what we're going to do is we're going to learn a simple technique using matrix in Excel, no? So bear with me, guys. Okay. First, we need to compute the variance covariance. Kasi ang tawag dyan, guys, may variance tayo at saka may covariance tayo, no? So we need to compute for the variance covariance. We need to access the variance covariance of the stock, no? So we can do that using yung ano ni Excel, yung data analysis function yan. Okay, so let's see first. Let's compute for the variance covariance. So you go to data and then dito data analysis. Now may I ask you guys if you have data analysis? Kindly chat please kung meron kayong data analysis dito sa analysis side. Okay, good. The rest, meron ba? Okay, good. Anyone who does not have that? Okay, looks like meron naman lahat, ano? Okay, so let's compute for the variance covariance. Okay, so let's see. Data analysis. Ito guys. Yan, covariance dito. Covariance. Okay, covariance. Okay natin. Okay. Now, input range natin. Ano yung input range? So dapat guys, yung assets natin magkatabi, no? Magkatabi dapat. So ang input range natin, tama-tama itong si Apple at saka si Microsoft. L3 to M10. Okay, na-capture yung hidden, ano? And then they group, and then the data is grouped in columns. Okay? Lagyan natin ng labels in the first row. Dali, i-ano natin. I-copy natin tong labels na to. Control C, Control V, para may label siya sa first row. Sasama natin sa data natin. Again, data analysis, covariance. Input range, highlight ko si Apple at saka si Microsoft. Kasi ito yung portfolio natin. No? Column siya, labels in first row. Saan natin ilalagay yung output? Let me put the output. Dito ko ilalagay sa ilalim. No? I'll just put it here below. Here. Okay? Alright. So that's okay. Again, input range. Sinama ko yung label ni Apple at saka si Microsoft. Grouped by columns. Labels in first row. Output range is, I'm putting it here. And okay. Alright. So this is now our variance covariance. Okay. I'll give you a few seconds to complete, guys, your variance covariance. When you're done, guys, paki-chat naman, please, so that I know if I may proceed. When you're done, guys, when you have computed for the variance, covariance, okay, good. Thank you, Patrick. Feedback from the rest too, guys. Thank you, Chiron. Caroline, thank you. Leon, good. Let's give a few more seconds to your classmates. Okay, good, good. A few more seconds, guys. Sana meron na kayo nito, no? Let's just give your classmates a few more seconds and then we proceed. Okay, guys? All right. So, now, ito guys, this is the variance of Apple, no? Variance of Apple. This is the variance of Microsoft. Yung nasa diagonal na to dito, these are the variances. Okay? Yung off diagonals, ito yung covariance. So this is the covariance of Microsoft with Apple. This is the variance of Apple, variance of Microsoft. Now if we take a look, if we compare this guys dito, ano ba yung variance ni ano dito? Ano ba yung variance ni Apple dito? 8.97, no? Eh ito dito 0.17%. So bakit magkaiba? Bakit magkaiba guys? Kasi guys, ito kinonvert natin ito into, we converted this into annualized, di ba? So gawin din natin yung dito. So unang-una kasi iba dito naka-formula, no? Naka-formula to. So let's copy this, Control C, and then i-paste na lang natin na number na lang. No? So values na lang para mawawala yung number. Yan. So natanggal na yung, para mawala na yung formula. No? Natanggal na yung formula. Tapos kulang pa tayo dito guys. No? Kulang pa tayo dito. So this is the covariance of Apple with Microsoft. And since these are yung covariance ni Apple with Microsoft is the same as the covariance of Microsoft with Apple. So this will be just equal to this one. Okay, or we can just copy this, Control C, Control V. Okay. Oops, dali. Control C, just the value. Okay. All right. So ang tawag dito guys sa matrix na to, this is called your variance of variance matrix. So this is your variance covariance. Variance covariance kasi yung diagonals, mga variance yan. Yung off diagonals, these are your covariances. Now let's convert this to annual kasi weekly lang din to eh, no? So how do we convert it to annual? Kailangan i-multiply natin ng 52, di ba? 52. So how do we do this? Highlight natin, Control C, copy natin, no? Control C, and then paste special. Control C, copy. Paste special. Yan. Multiply. And then mali ako, sorry. So dapat pala to, no? Control C natin. We're going to multiply it with 52. So I'm going to copy this to these cells. Control C. Okay. Highlight ko dito. Paste special. Multiply. Yan. Okay. So what I'm telling Excel is to multiply all of this by 52 para ma-annualize natin yung ma-annualize natin yung variance. Okay? All right, okay. Okay, so tama na ba to? 8.92%. Okay, so yan. 8.97, 8.92. Hindi siya eksakto talaga guys kasi trinangkate na natin to, no? 'Di ba? Kinapi-paste natin as values. Okay, pause muna ako guys. Any questions so far? Okay, good. Thank you. How about the rest guys? Dapat pala preserve ko na lang yan, no? Tapos ako dapat nag-create na lang ako ng panibagong table para na-maintain ko pa rin yung weekly variance. Okay, sige. And good, good. All right. Now, as an exercise, guys, i-compute natin yung portfolio risk. Dito natin aligay. Tapos gamitin natin yung long cut muna, yung long cut na formula. Yung long cut na formula ng portfolio risk. So it will be equal to this one. No? So i-multiply muna natin. No? W1, this is W1. No? Ito, W1 squared times variance of Apple. So ito yon. No? That's the variance of Apple. Okay? But that's the first term. Plus 2 times W1 times W2 times covariance of 1, 2. So you either one of this. No? Covariance of 1, 2, I'll just choose this. And then plus ito na susunod, no? W2, this is W2 squared. W2 squared times variance of 2. The variance of 2 is Microsoft, this one, variance. Okay, enter ko lang tapos palaki ko yung formula. Oops, sorry. Okay. Paki-check guys yung computation niya tapos when you're done, paki-chat naman na yes. You're done guys? Kindly chat, please, if you're done. Thank you, Yana, Patrick, thank you. The rest, guys. Thank you, Kyron. So let's give your classmates a few more seconds to finish. Okay, may mga anyone else would like to respond to the question? Kung okay na, guys. I hope you're following along. Okay. So check natin yung formula natin. W1 squared times, okay, two times W1 times W2 times, okay, squared times W2. Okay. Okay, now, so this is a portfolio risk, no? Now, you notice, guys, that usually dapat yung portfolio risk dapat mas mababa kaysa dun sa risk ng ng individual assets, no? Now, the way I'm seeing this, guys, is yung pag-compute natin itong mga, kasi yung variance natin dito 8.92%, 8.93, dito 8.97. So 8.97 plus ito 5.45, tapos ito 5.48. Okay, 5.40, 5.45, 5.48. Ang question, bakit? So wait, $50.50, no? %, 50% W weight squared. Okay. So siguro, guys, sa rounding off, no? But let me check this, no? Kasi dapat mas mababa, usually, mas mababa dapat yung portfolio risk natin compared to any of the individual assets. No? If we get the square root of this, .24, okay, 24%, lower than Apple, pero mas mataas pa rin sa Microsoft. No? So, ang isang possible reason na to kasi inuna natin to, no? Yung ginawa nating values lang. No? Parang truncate natin siya. Okay, but anyway, so sige, ituloy natin to. No? Now, imagine guys kung 5 asset portfolio, pag 5 asset siya, 15 terms na ganito. No? So that can be very unwieldy. So there's a better way to do this. It's using the matrix formula. Okay, just one thing we need to know about using this, yung matrix formula, kasi may mga rules sa matrix multiplication. So ang rule sa matrix multiplication is that, so let me write that W, weight matrix, and then the variance covariance matrix, and then another weight matrix. Okay, so depende kung paano nakasulat yung ano natin, yung weight. Yung weight natin is in this form. Ano yung size itong matrix natin ito? When I say size, anong size ng rows, anong size ng columns? So this is 1 row by 2 columns. No? 1 row by 2 columns. 1 row, 2 columns. Ito namang variance covariance natin, this is 2 by 2. 2 by 2. Okay? And then this one, weight transpose. So, pag minultiply natin to guys, may rule dapat yan eh. Dapat yung column ng first matrix should be the same as the row of the second matrix. Yeah, 2 ito, pwede siyang i-multiply. No? If it was, kunyari, W 2 by 1, tapos yung variance covariance natin 2 by 2, 1 to, 2 to, hindi pa pwede i-multiply yan sa matrix. No? Dapat yung row ng first matrix should be the same as the column of the second matrix. So very strict yung matrix multiplication sa rule na yan. So therefore, ito, 1 by 2 tapos 2 by 2, pwede yan, multiplicable. The resulting matrix will be 1 by 2, yung mga nasa outer. Okay? 1 by 2 yung resultant matrix. So anong size itong weight transpose? Yung weight transpose is the weight matrix na binaliktad natin, transpose natin. So since 1 by 2 ito, yung weight transpose natin magiging 2 by 1. Okay, so now, is this multiplicable? Yung result nitong W times sigma, multiplicable ba siya dito? Yes. Kasi ito 1 by 2 to, no? This is 1 by 2. Tapos ito 2 by 1. Okay, multiplicable siya. And the resultant matrix is 1 by 1. So isang cell lang talaga, no? Isang cell. Okay, so we're going to do that in Excel now. Okay. So sa Excel guys, ang matrix multiplication is via mmult. Okay, so let's do that. So una, yung weight matrix, i-multiply natin sa variance covariance matrix. So let's do that. Mmult, no? We're using mmult. Lakihan ko to. Is equal to mmult. Mmult daw ng ano? Weight matrix and then the variance covariance matrix. So this is our weight matrix, comma, variance covariance matrix. It's this one. There. Okay. Yan ang una, no? Yan ang una. So ito yon. Ito. The second one is again matrix multiplication. Yung result na to, i-multiply natin sa transpose nito. So dapat naka-transpose siya, no? Yung transpose guys, binabaliktad yung position. Kasi kung hindi natin ibaliktad yan guys, mag-e-error tayo, no? So once again, I'm going to, again, M-mult na naman tayo. No? Another M-mult. Okay, another M-mult of the first result. Okay, and then, ito natin ilalagay sa dulo. Saan natin siya M-mult? Sa transpose ng weight matrix. Transpose, a functional transpose of the weight matrix. Okay, there. Yeah. Okay. Now I know that the formula looks quite daunting, no? Pero that's a lot better than using this. Diba? Kasi kung kahit na 10 asset portfolio yan, ganito pa din yung formula. E pag 10 asset portfolio, guys, pag ima-manual natin yan, 55 terms, no? Tapos na yung ubusin buong araw, hindi pa tayo tapos sa pag-compute yan. Okay? So, this is an array formula. When you perform an array formula, guys, huwag nyo i-enter. Sige, pause muna ako, guys, and magta-time na pala. No? Gawin nyo muna yung formula, and then, pag nagawa nyo na, mag-chat kayo, guys, huwag nyo muna i-enter, ha? Kasi, huwag enter dapat, Control-Shift-Enter dapat yan. Control-Shift-Enter. Let me do that. Control-Shift-Enter. There. Tignan nyo, pareho, no? And it's a lot easier, of course. Flash ko nga. Okay, there, guys. Let me just increase the para mas kita siya. Yan. Control-Shift-Enter. Lagay ko nga dito. Okay, paki-chat nga, guys, kung ano, it's almost time. If you were able to get it. Good. Okay, thank you, guys. Now, uli na lang to, no? So, dapat Control-Shift-Enter, guys, no? There's a more simple formula. Okay, itong gagamitin natin. No? So, ang mas simpleng formula dito is also matrix. Kaso gagamit ng sum product. So, let me just show you. Sum product ng M-mult. So, i-M-mult natin yung weight matrix natin at saka yung variance, covariance matrix natin. And then, kasi di ba weight times variance, covariance, and then together with the mult, so sum product nito at saka ng weight matrix ulit. Control Shift Enter. Okay, there you go. So pare-pareho lang yung formula niyan. Kaso I find this to be a lot easier. Ito, yung sum product ng M-mult. Okay, but the concept is the same. So compared to the other one na may dalawang M-mult tapos isang transpose pa, this is for me the easiest formula to compute for the for the portfolio risk. Okay, it's already time, guys. Summarize ko lang very quickly. So in order to compute for the portfolio risk, guys, kailangan lang natin yung weights at saka yung variance, covariance, no? Ito. And we can use the matrix already. Itong variance, covariance, easily we can get that in Excel. Now for next meeting, we'll finish this. Okay, for next meeting, ang gagawin natin, guys, ito na, no? Ito na yung 8 asset portfolio na tayo. So dito ilalagay natin yung yung variance, covariance natin ng 8 asset natin. Okay? So andito yung mga annualized returns natin, guys. Annualized returns. Ang gagawin natin next meeting, magko-compute tayo ng portfolio risk, returns and risk. Okay, and then mag-optimization tayo, which means anong portfolio ang magbibigay sa atin ng pinakamababang risk. Okay? So hahanapin natin yung mga weights kasi una inassume natin na equally weighted lang sila. Okay? All right. So that ends our lesson for today, guys. Thank you so much. I hope you learned something today, and please take care, and again, Happy New Year to all of you. I'll see you on Wednesday. Thank you.
Thank you, sir.
Thank you,
Okay.
sir.
Thank you.
sir.
Thank you, sir.
Thank you.